Hello, everyone. It's Jennifer Williams, and this is my podcast, LUXE Life. I am also a realtor with Global Banker Gold Coast, and today I have the pleasure of having Guaranteed Rate Affinity. I have 3 loan officers from Guaranteed Rate Affinity, and so I'll allow them to introduce themselves. Elise?
Yeah. Hey, everyone. Hello, my lovely listeners and anybody watching here on the tube. My name is Elise Elizalde, and as Jennifer said, I am a loan officer with Guaranteed Rate Affinity, and I'm just super excited to be on the show.
Well, thank you very much. Natasha?
Hello, everyone. I am Natasha Robinson, MLS number 332074. Excited to be here to talk to you guys today and share some great information.
Nina?
Hi guys, Loans by Nina here. You can find me on every social media platform, IG, Facebook, LinkedIn, Twitter, Loans by Nina. Loan officer for 2 decades. I just celebrated my 22nd anniversary. So I'm super excited to be, thank you. Super excited to be here this morning and, get to hang out with these bomb ladies.
We definitely are a force to be reckoned with, that's for sure. So to our listeners and to our viewers, questions. We all have questions. This real estate market has gone from extreme, just mass chaos to almost stop. So does that mean the market stopped? It doesn't. And that's why we have these 3 fantastic ladies on today. We are going to talk about the programs as buyers and sellers. Each agent or each loan officer here with us today has their own niche. They have their own market. They have their own jive and vibe. So we're going to find out who does what and how best to connect with them. So Elise, what's your go-to? What's your niche? What's your passion?
That's a great question, Jennifer. I'll start by saying that Natasha, Nina, and I are all on a team together. We work here in Chicago, but to your point, Jennifer, we all service a myriad of different clientele, things that we are really good at or have gotten kind of just experience with that have led us down our each individual path as loan officers. For me, I'm 33 years old, so my demographic that I tend to serve, just because of my sphere and my network, tends to be first-time home buyers, people that are aging into prime home buying years, right? Maybe they have just graduated school and have had a couple of years on the job under their belt and are looking to purchase a condo downtown. I do a ton of condo financing, but it's because until very, very recently, I lived downtown here in Chicago in the West Loop and was doing loans for a lot of my neighbors, to be honest with you, and people I went to college with. Now, yeah, so now my sphere is in a similar kind of a place in life that I'm in, right? I just had my son, he's almost 11 months old, but
it was adorable.
Yeah, thank you so much. His name is Gus, and he is a true king. But my husband and I realized we needed more space. So now it's, we're transitioning to single family living, and I've helped my clients do that. For me, it's really about educating and empowering my clients to make the right financial decisions for themselves and their families. It's home ownership can be, and I should say home buying can be a very daunting process because you're speaking a language that you don't necessarily have to speak every day. You should be expected to be fluent in it. So that's where I come in. And it has just kind of been a lot of helping clients in the same stage of life that I'm in myself.
Wonderful. Now, Natasha, you're next. Now, if I recall seeing someone won an award not too long ago.
Yes.
Tell us your niche and give us a little bit about that. What was that award?
Well, I'm trying to think of which one. So I am Natasha Robinson, Loans by Natasha on Instagram, and I am a top 1% originator. I think we closed about over 300 loans in 2021, as well as volume totaling about 83 million. So we do a lot of loans. I am a house hacker. So what that means is that I utilize low down payment programs and lived in properties as I gained my portfolio for real estate. And I was able to utilize those properties and the equity in those properties to build equity, self-esteem, advanced job opportunities. You know, multiple things happen from the ability to be able to house hack. And I was able to use real estate to do that. So my niche is that I teach clients, number one, how to house hack. A lot of house hackers, what that means, if you're a house hacker, it just means that you buy a property. So say, for instance, you purchased a 4-unit property. You only have to put 3.5% down on that particular property. And you also can have the seller assist. And if at the time there's down payment assistance, you can utilize every first time or owner occupied program available. So you're getting into the property for the least amount of money. You're going to live in that property for at least 1 year. And as you live in the property, you learn how to be a landlord, you learn how to manage your properties, you learn how to make real estate a business as well as just your home. From there, you then can buy your second property, which is generally a 2-flat on my term, because you go from a 4 to a 2. In that program, we also have down payment assistance for a second time buyer. And you're able to get into that property with as low as 5% down, right? Still low down payment, while you're gaining equity in those properties. So then as you go to your third property, my third property was actually my single family home. But for some of my clients, that third property may be their investment property. They may have gained 80,000 in equity in property number 1. And now they're going to take that equity in that property to purchase an investment and build their portfolio. So I help first-time home buyers become house hackers and investors over time, utilizing the low down payment programs. Now, in addition to that, I am a renovation specialist. So every property that I purchase, not every, but most of the properties that I purchased did require renovation. So in addition to putting 3.5% down, you can also include renovation. So if you get an ugly 4-unit for a very low price, you can utilize low down payment, renovation funding for your contractor, closing cost assistance from the seller. And if there's programs available that allow for down payment assistance on the renovation, which sometimes very slim, but for sometimes there is, then you can utilize that as well. So my niche is house hacking and renovation loans, is what I would say.
Wow. Not often I'm speechless, but wow, that sets it takes so many people and sets them up for success. It shows, and you almost have the playbook of how you can go from zero real estate to actually owning a few properties, building equity, gaining, coming and moving through. That's what this is all about. That's what the name of real estate is.
Yes, we got to get them. We got to help them create their own seat at the table, and you can do that with real estate.
You are so right. So right. Nina.
Wow, how can I come up after these two? You should have put me first. I'm just so proud to work with these ladies. So Elise, Natasha, I, and the rest of the team, we complement each other so well. I would say my niche comes into coaching. So I have plenty of buyers who were not mortgage ready, right? 3 months ago, they didn't know what to do or how to do it. And I specialize in utilizing all the programs and platforms available to get that person into their first home. Natasha spoke on people building rental portfolios, and Elise spoke about entering the home buying market, right? But I have a lot of people who don't want to be landlords. They just want to have appreciation, and they want to have a nice tax write-off. I've seen waves of the different clientele that I've helped. Right now, in the last 2 years, it's been people who have increased income and net worth, and not realizing that missing out on that real estate, that is one of the ways to gain appreciation, but also be able to write off a lot on your taxes. Because once your income starts creeping up, if you don't have dependents, or if the dependents are already on their own and you don't have huge write-offs like a business or anything to write off, property ownership becomes that channel where you can really leverage the tax codes in the US. I also have a lot of relationship with local housing partners. I mean, for a very long time, although I always wrote mortgages, but for about 3 years, I was actually mediating and helping people retain ownership of their properties. So those kind of routes into the neighborhoods throughout the city of Chicago allowed me to create the long-term relationships today that if there are city programs or county programs or neighborhood specific programs, I get a direct phone call to the Bat Cave that says, hey, Nina, this is coming, line up your people. And I usually have an insight that I don't keep it to myself. I make sure to spread it around with my team and even educate my realtors about these programs so they can help spread the word. We need to utilize all of these available channels to ensure that we create ownership, whether it be one single family home or 20.
You are so right. And that's what sets us apart, is to have that knowledge, to have that understanding of what so many people do not realize how many programs there are out there that are available for new home ownership. You know, we all talk about affordable housing. And then also, well, benefits of being the buyer, benefits of being the seller, especially even in this market. What can we do? There are tools out there to help, you know, renters. I've heard a renter, you know, look at the interest rates right now, and renters are paying right about what, 120% interest versus whatever our given market is now because of the loss of the your money making money for you. So we've heard about 2-1 buy downs. We've heard about all these different tactics and strategies, if you will. Elise, why don't you touch on a few of those? You and I had talked about something in Will County.
Yeah, so I feel like Nina will know more. I did jot down some notes about that Will County program, certainly. But I know Nina, that's something that she was educated on a little bit more than I was. She, like she mentioned, shared that with me.
Sure.
I can touch on it, Nina, or you can, but look, Nina said something that I think is really, really important for any listeners or viewers to tap into. Real estate, I feel like, is one of the two best kept wealth generating tactics or vessels in this country. And it's not even, it sounds like it's a secret or something with such a monster barrier to entry, and it's really not. When you look at, to be honest, my investing strategy and my general strategy for maintaining wealth or building wealth, I tend to look to people that already have a ton of money. And also a really simple way or good way to look into what might be a good long-term play for me is looking at what like politicians do with their money, right? Because there's a lot of self-interest and they're going to protect whatever their interest is, okay?
Right? I know.
So for me, there's two vessels that I think go so hand in hand. Number one, real estate. That's what this podcast is about. It can be really daunting, but as Nina and Natasha said, there are, ways that you can get that money for that down payment and set yourself up for wealth building. Kiplinger released data that said the top 50% of wealth holders in this country garner 2/3 of their net worth through home equity, property equity. So people that basically have a net worth of $500,000 or more, two-thirds of that is in property equity. Okay. So that's how they're generating wealth, is through real estate. Okay. It's the only thing in times of economic downturn that tends to have really protected returns. Even now, when we know we're going into a time of economic downturn, or the big R word, recession, the FHFA, the Federal Housing Finance Authority, came out and said their expectation is that home prices are going to appreciate by 5.5% every year for the next decade. Okay, historically, in the last 8 out of 9 recessions, home prices and values appreciated both during and after a recession. Now's the time. One of two things is true. Rates are going to go up or rates are going to go down. If they go up and you buy now while rates are high, right? Then
this isn't really high. I mean,
it's not. Yeah, I mean, but let's buy into that narrative that, oh, rates are so high, right? You buy now and rates go up. Well, now you look like a genius because you bought when rates are low. Or rates go down and you refinance to a lower interest rate, and maybe it costs you a couple $1,000s, which I get. That's a significant amount of money. But to your point, Jennifer, in the months that they're waiting to get into the game, they're losing out and paying 120% interest. They're paying $3,000. The average rent in Chicago, that's 2 months rent, right? It's $3,000, which is going to be like probably the most costly refinance that you're going to do. So that's one thing that I think I'm focusing on. Number 2, life insurance. That's not the base of this podcast, but I think if
it's LUXE Life, it's our podcast. We can do whatever we want with it.
Let you guys know that I pay my life insurance before I pay my cell phone bill.
Yes.
I will tell you this. I will pay my life insurance for me, my kids. Everybody has policies, and it gets paid before a cell phone bill gets paid.
That is, if you look at our senators and representatives, you better believe that they protect life insurance policies, because it is one of the easiest ways to protect and grow your wealth. It's tax-free. I have a life insurance policy on my 11-month-old son, which I get can be kind of morbid, but it's never going to be more cost effective for me to take out a life insurance policy with a cash value than right now when he's 11 months old with no pre-existing conditions, right? Now I've set him up for, if he decides he wants to go to college, we're pulling that money out cash-free or tax-free, or I'm rolling it into a wealth generating vessel for him when he's in his 30s, which statistically is the most expensive time in our lives, right?
Yeah, we're
married, buying homes, starting businesses, having kids, so certainly life insurance and real estate go hand in hand. It's something I've been talking a lot about, even while this market seems daunting.
Well, we'll get through this. We've gotten through worse, really. So this is going to be, we're waiting on the fence for the market to crash. In the meantime, while we're waiting, things are appreciating. Things are continuing to increase and grow. Whether we're looking at first-time home buyer or we're looking at, purchasing a multi-unit building or being a landlord. It's still, the fact of the matter is it's still going to continue to increase. So get in now as the buyer and the seller. So, and then with the life insurance policy, you need to have a homeowner's insurance policy with real estate. And then, so you bundle that all together and get a better savings as well. It's a win-win.
100%. And life insurance can be super cheap. You can get a term life insurance policy for a couple bucks a month.
Yeah, it does. It can. It's
cheaper than Netflix. Get one. What are we doing? To answer your question, though, the original question you asked before I went off on deep end about life insurance and wealth. Right now, 2 tactics that our team's been using a lot of is, you mentioned the temporary buydown. It's basically a seller credit. What is a seller credit that we're using to subsidize your monthly mortgage payment for up to the next 2 years. What's great about that program is that you are guaranteed that money, right? You're saving on your monthly payment. As prices go up, right? We're still battling inflation. You're minimizing your monthly housing expense and your monthly carry. But if rates should plummet in that time, you can refinance and you're not losing out on that balance that the sellers provided you. You can utilize it to pay down your principal balance, AKA your loan amount that is owed. Additionally, Guaranteed Rate Affinity waives our lender fees for any client that takes advantage of the 2-1 temporary buy down and refinances after the first year. So you're getting, so your seller's paying for, or subsidizing your mortgage for 2 years, plus you're getting a free refi. So
Nice. Natasha, what do you have? And then, Nina, we're going to touch on Will County with you. What do you have in your niche as far as to get people into, what can they do? How do they get started?
So I always tell clients right now, rent the interest rate, and buy the house, right? Just 4 months ago, my clients was going $40,000, $50,000, $60,000 over list price with no closing cost credit. Now in this market, you can get, in every market is different. I'm not a realtor, so I don't, nothing is set in stone, but I've seen my client right now, he's in a 3-unit property. It was listed for $715,000. He was able to get it for $649,900. Plus, I was able to negotiate the seller to not only pay his closing costs, but also pay 2% in discount points to buy the interest rate down, right? This guy, the seller really wants out of this property because he's nervous, about the market, but my buyer is going to live in the property. So he doesn't, appreciation doesn't matter if you're not selling. So if you're going to live there for 10 years, of course, it's nice to gain some equity while you're living there, but you're taking advantage of writing off the mortgage interest, your landscaping, your homeowner's insurance, any repairs you do to the property, you're able to write those things off to get tax incentives on your tax returns. And every year you're paying down that 30-year mortgage. And in 30 years, you can retire and have a free and clear property where if you continue to rent, you cannot do that. So renting,
you're throwing the money out the window.
Yeah. Exactly. Renting is not an option, guys. Like whoever created, the renters with the lavish amenities and, because of these amenities, you want to give up $36,000 or $24,000 of your money to go towards someone else's property. It's just not a good idea. I had a scenario.
You're right. It's not. I mean, at the end of the day, you're paying somebody's mortgage. Either you're paying your mortgage or you're paying someone else's.
Or you're paying mine.
Right. Exactly. No matter what. I mean, it is what it is. You're paying a mortgage. Just whose mortgage are you paying?
Exactly. And they're trying to scare our clients crazy, right? But I always tell my clients, look at the numbers. What is your mortgage on the property you want to buy? What is your current rent? Does it make sense for you? And if it makes sense, then of course you do it. I had a situation with a family member client. He wanted to rent downtown. He wanted to live in, one of the nice South Loop, not downtown, high rises. So what we did, he's in his 20s. So what we did was we found him a 3-flat in Bronzeville. He lived in the property for about 1.5 years. And he doesn't have any kids. So his average rent was like $1,600. So after over about 1.5 years, he moved out of the property, rented it out, and then went and got the apartment. I was okay with that because now his apartment is paying for that apartment. And over the past 3 years, his building probably has appreciated over 80 to 100,000 in equity. So once again, he is a renter, but he used his rent to rent, which was a unique situation. But like I said, when you look into the strategy, you can find a way to still come out on top and still become a homeowner and still take advantage of what home ownership offers you.
I think that's a lot of things too, is like with home ownership, we look at it as this daunting thing, or we don't know how to go about it. How do we jump in? How do we dive in? I have clients that they want to be investors. They want to do exactly what you're talking about, Natasha, and they still want to say, we don't know where to start. So, and what we're trying to do is like give them that education, give our audience that education of pick up the phone and give one of you guys a call, because if you're going to guide them. It's not, we're here to help you, not to hurt you. And
I would say this, there may be some of you listening that think that there is something so glaring on your credit history or like, with your financial situation that we have never seen before. And first off, we've seen everything. And also, if you could not pay me to tell you and I'm not saying from a compliance standpoint, although that too, but
Yeah.
I mean, I have the true gift, and I think every loan officer will tell you, I do not remember a damn thing on anybody's credit report after I look at it. Unless I'm in the file, I truly do not know or care about what's on your credit other than how are we going to solve it. So you just reach out to us, because we're not going to remember. It's not going to be like, oh, we're going to see you at DSW and be like, oh my gosh, that's the girl with the
with that. Yeah.
with the bankruptcy. Like, no
we
one
don't need to pay
cares.
attention to, do you qualify and how do we get you qualified?
Yeah, so call us.
And it's all about too, like, what are you afraid of? Pick up the phone and give a call to any of us. We'll point you in the right direction, or set up a meeting, whether it's virtual meeting, and ask the questions, because you don't know till you don't know, you know? I mean, you have to, if you want to make a change, what you guys are presenting is the way to do it. You want to grow your wealth, you want to get out of the rut, you want to become a homeowner, or even with selling your property, go to that point, selling your property, you want to align yourself with a team that has these tools and knowledge, at their fingertips. I want to talk to Nina now too about Will County. What's going on with this?
All right. So before we get into that, though, there is.
That's okay.
One of the biggest, I think, hurdles to purchase, or one of the most common conversations I've been having since COVID and post-pandemic, is financial dieting. So there was a lot of spending trends that we incurred while being inside of our home. Delivery, subscription services. I promise you that a lot of people are eating and watching their down payment, and that budgeted monthly housing payment, if you scale back and have a good deep look at your spending habits. Okay.
Now, so that's something that you can help with too, right? Let's say
this is something that I can help with, because we see bank statements every single day.
Sure.
I had individuals who are assistant managers at fast food restaurants be able to be more disciplined than deans making 3 figures at charter schools. I know that we are capable of buckling down and figuring out that, not jointly with these down payment assistance programs that are available to our fingertips, but also be empowered to have money of our own. Because although these programs are available, they do have eligibility requirements. Okay.
Sure. And they can go over that when they contact you guys to see what the eligibility is. But then how to get them there? If they're not there today, how do we get you there?
How do we get you there? The other day I had a class. We were doing an actual workshop where I made people work. Take out your expenses, take out your pay stubs. Let's look at what, these liabilities are. And I brought out my bank statement as a example of what not to do, because I wasn't in the process of buying a house. So no, you don't stop by Starbucks, and you're not ordering DoorDash at 2:00 in the morning because we wrapped up movie night and everybody wants pizza.
Right.
Because currently I'm not buying a house, but I advise them, I'm looking to purchase a commercial property in the next 6 months. So this behavior has already changed. And then I've shown from the end of summer, how walking into the fall, how I've eliminated a lot of spending. And although I don't need my family's permission, I want to include them in this mindset so they understand when I say, no, we're not going to, the Illusions Museum. Everybody pays $50 to take selfies. We're not going to do that randomly this weekend, because there's a plan and a purpose in place. And my family, they support me, they will understand and come along with the vision, right? So you don't need your family's permission if you're the head of household, but it feels really good for them to also be empowered
and be in line with what your goals are for that household.
I
Okay.
love the use of empowerment, because that's what that is. And actually, I think that's what we're going to title this episode, is because it's about empowerment. We are empowering people to make positive changes to their life. And sometimes when we're making changes, it's painful. It hurts.
Yeah.
Oh, good. Everybody can do it, right?
Amazon misses me.
Mhm.
Right.
They
And the
sent me
fact-
they sent me like 3 messages already, like, here, let me give you some credit, or this is sitting in your wish list. Would you like
Yeah.
it delivered by Saturday? But there is just a vision of what I see in line. And I might carry it on forward, or it might be temporary, but I'm the one who's in line of what the cash flow looks like in my house.
But you're in
have
the driver's seat. You're in the driver's seat, and your family members are coming along with you. You know, that's huge.
I was listening to a podcast yesterday. I mean, if we're talking about just strategies for just a growth mindset, instead of listening, if I'm alone in the car, I only am listening to audiobooks and podcasts. It's something I'm doing just to try to do the same thing that we're encouraging everybody that's listening and watching to do, which is just taking a step forward. It's something super simple, and I feel really accomplished when I get out of the car, right? But I was listening to a podcast yesterday that over 50% of people have never completed a budget for themselves before. And the number, and
we have to every year we in our industry
have to.
Yeah.
And the number one reason why people don't budget is because they're afraid that they're going to have to do something that they don't want to do, that they're going to have to cut spending. But what if a budget, you're thinking, oh, this is financially limiting to me. But what if the budget is the thing that drives your financial freedom? It allows you to do more of the things that you want to do. It allows you
driver. Yes. Did you guys all just freeze?
Where this is coming from, just do it. Audit the last 90 days of your bank statements, and you'd be surprised at the kind of things that you forgot you're spending money on.
Yeah.
We can help you do it. If your goal is homeownership, we'll help you do it.
We'll help you do that.
Yeah. The automatic payments and the things that just automatically just come out, we don't really, we think about it. You forget, you set on autopilot and you forget about it. And then but that doesn't help to bring us to our goals. And you're right. And in real estate, as a realtor, we set our budget for the coming year based on what we want to see our performance, because we all start out at the beginning of the year with zero in sales, 1 of 23, 0 in sales, because the likelihood of you having closing on that date ain't happening.
Yeah, title companies are closed, so we're not closing.
Exactly. It's not happening. So that's definitely, it's encouraging also to hear it's a trust thing. If I'm coming to you and I'm opening my books, if I'm a client, I said, okay, I want to purchase commercial property. I want to, be my own landlord. I want a first-time home buyer, whatever it is, reno loans. It's that trust thing. We have to trust, because it's a big deal. We don't want to open our books up. Here you go, take a look. But it's for our own good. It's like ripping the Band-Aid off. You really don't want to rip the Band-Aid off, but you have to. Sometimes you just gotta let it go.
So back to the $25 available.
We're going off the rails today, baby.
Woo! That's, what? And that's why I enjoy doing my own podcast, because we can do whatever we want.
So just to give you guys an overview and highlight of this Will County program, that it's in Will County, but also covers Joliet, the parts of Joliet that are in Kendall County, right?
Oh, okay, that's cool.
Oh, nice. Okay.
Huge. This is huge. Okay.
Do we know if it covers the parts of Bolingbrook that are in DuPage?
No. No.
Yeah, I'm like, oh, I wonder. Okay, go on,
This is
go on.
It's only available for single family homes, manufactured homes, no tenant occupied properties. So you're gonna get $25,000. It will be recorded as a lien on the title for the purposes of ensuring that it is being used to sustain communities. But you don't have to repay it back. Okay, so single families, condos, townhomes, manufactured homes on fixed foundations.
Yep.
And Will County, City of Joliet, even the Kendall County boundaries. And what I wanted to bring up about this more than anything is the income limit, right? So the assistance programs are available. But once you start creeping over a certain income, there's not a lot of assistance. IDA, Illinois Housing Development Authority, they're generous. And when
I do want to know about that. Yes, I want to talk about IDA as well.
and all of us are well versed on that. And Natasha,
I want to take IDA. But yeah, let's go Will County and City of Joliet. I'm curious.
for a family of one, the income limit is 58,000 and some change.
Mhm.
Family of two, 66,700. Family of three, 75,000. So you got to get to a family size of 5 for a $90,000 income to be used with this program. So if you make 60,000 or 59,000, this program, you are not eligible for this program. Okay, so it's really geared towards the low to moderate income.
So again, spurring our affordable housing, which is what we're chanting so much. Affordable housing, affordable housing, affordable housing, because that's the best, real estate, not just because I'm a realtor and, you're with Guaranteed Rate Affinity. That is the best way to start to build your wealth, is what, a lot of this conversation is about, is wealth building. So now we're giving people another opportunity that really don't know that they have that opportunity out there. So that's wonderful.
There is a limit on your purchase price. So you're at 286,000 purchase price and inventory in that county for this purchase price, especially for a starter home. I mean, really, like Elise was saying, we go in there and you're starting off in your career. Did you know that you could use your college education as employment history?
Yeah.
As long as you can use college education as employment history. So I
know that.
with an 8 degree. And now I'm working in Bob's Furniture as a human resource payroll clerk. And I'm making $50K a year. I can get qualified even if I just graduated in September to purchase a home. As long as I have all of the lineup, most college grads within that time frame, they proudly will present their transcripts. Oh, I have my transcripts. Do you need them official? Do they need to be stamped? Well, they will have them proudly available to share to you. So if you are a recent graduate, you can contact any of us to help you leverage your new career and real estate and get you into programs like this. And
let's set you off on the right foot. Let's set you off.
Absolutely. To Natasha's point, she just said she had a client that bought in the South Loop multi-unit. Look, we can get you qualified with as little as an offer letter in some circumstances. So if you're a college senior listening to this right now, and you are going to be graduating in May, you have an offer letter in hand or are expecting one soon, we can get you started to purchase a property coming into the summer months here in Chicago, or Natasha's licensed in like 80,000 states. But we can get you, I mean, I guess that's another thing, like we can list off, we'd be here all day if we had Natasha list off every state that she's licensed in, but I'm
Well,
at
let's
least
make it a whole different podcast because, you know, I'm Global Banker, Global Luxury, so we're worldwide,
Yeah.
baby.
But you know, if you're coming out of college, have an offer letter in hand, hit us up because we can get you into a multi-unit property that you can rent out to your other friends that just ain't got it going on yet or don't want to do it.
It's getting hot.
Instead of splitting somebody else's, you know, paying rent on somebody else's property. Let's buy a multi-unit and rent it to your friends. Come on.
Mhm.
Have to be like yesterday I was speaking to a 38-year-old college student. Okay, so these don't have to be like master's degrees and PhDs. Like there's some even vocational certifications, right? So if you went to HVAC school and you got certified, now you're a technician for 4 seasons, baby, dial us and we can get you a house in the winter, spring, summer, or fall. Okay.
So what about with the unions then? Okay, because, you know, we're a union proud home. Does that, I mean,
I think we would have to handle that case by case.
oh yeah, but I'm saying as far as the certification, you would have that if you had an offer letter, if you had something of that, I would wonder if.
Can we use their apprenticeship kind of thing?
Yeah, like their apprenticeship.
Yes,
I believe so. Like literally, I had a client that contacted me. And here's the thing, what I will say about Nina, Natasha, and myself and the rest of our team is we're going to work our behinds off to make it work if there's a way. I had a client that I was released from prison, and he had a job offer and had been on the job for 6 months. Generally, you know, it takes us a little bit of time to get enough pay statements and evidence of kind of what we can use to calculate. But, you know, he had gone to another lender and the lender said, we can't make it work. You know, because he ended up being union, because he had done an apprenticeship and done all of his training in prison and gotten a degree there. I ended up calling the prison warden and we were able to use evidence of work history as experience in that line of work that he was doing work detail while he was incarcerated. So we can get pretty, you know, if there's a way, we're going to find it for you. Yeah, we can I mean, I can't speak to if the guidelines have changed. I think that was like 2 years ago or so. Is before
everything changes, and that is one thing that we will.
But we can at least look into it. Yeah, generally apprenticeships and training is similar to.
I mean, we're not financial advisors, and when this airs, you know, we could be compliant with our guidelines at the time of this airing. It doesn't mean that it's going to be the same the entire time. So everybody has to reach out to us at that time, and we'll guide you the best way that we can. I think our listeners can all hear the passion and the dedication that we all have when we bring to the table. You know, we're driven.
Yep. And just so you guys know, that guideline is a crazy guideline. And what it is that if you haven't worked in years, as long as you have 2 years of working history in your lifetime that we can verify verbally, and you're back on your job for 6 months, then we can do a loan for you FHA, which is absolutely amazing. So as you talk to Elise, Nina, or I, you know, when we're looking at that, we can kind of let you know what you qualify for. But I did want to chime in on when you say, what should people do? And honestly, you should really just do it. You know, from my experience, like Michael Jordan, just do it. From my experience, most people don't qualify because they're ashamed or they're embarrassed. So I just want you guys to know, I started out to purchase a home. I was self-employed. I didn't really have a financial situation to get ready. So I had to work with a loan officer because I wasn't a loan officer then. And my credit score was my credit score was a 474. So from that, I did credit repair. I fixed my credit, and, you know, now I own multiple properties and my credit score is in the high 7s, right? Because I learned. So that my advice to you is don't worry about where you are, because if you don't click the apply button and at least see, then you're going to be in the same situation next year. But maybe you click that apply button, like my client from 3 days ago. She swore she had a 560 credit score and it came back at a 620. And now we already have her pre-approval out. Take the step. Like, we have the patience. We're going to work with you. We'll pair you with credit repair. We'll get you ready, but at least know where you stand. Credit is meant to be pulled. Your credit is meant to be pulled. People with 800 credit scores, they pull their credit 5 times a day to make sure they get the best rate. Pull your credit, know where you stand. And most important, if you're worried, open your mail. Most of your problems are right in the stack of mail on your desk, that if you open it, you'll address those issues before it hits your credit. So that's my advice for all of our people who are worried to take the next step. But the worst thing that can happen is you'll be in the very same situation you were before you started. But the best situation is that you'll be pre-approved and off to find your new home.
Let the people know.
Yeah.
Jennifer, the name of the podcast, Open Your Mail.
Open your mail.
I'm gonna make sure I put that in the description somewhere.
Open your mail. You'll be amazed of how many people houses I go to when they have stacks of unopened mail. Do you know it might be checks in there? It might be checks from ComEd, deposits. Open that mail, y'all. That's where the problem is happening.
That's the thing, and that's too, again, your energy, your vibe, the way that all 3 of you present yourself, you're not going to bite. You might say some harsh realities, but maybe somebody needed to hear it. What are you afraid of? What are you waiting for? You're not doing yourself any better by not picking up the phone and calling, not finding out where, and Natasha being licensed in 8,000 states, means that, and our podcast is heard worldwide, means that anybody can pick up the phone and call you.
Yes.
It doesn't matter.
Can't do it, we know who can, right? So if you're not my client, I know whose client you may be, right? So I am a resourceful loan officer, and it's not just about me earning a commission on your transaction. It's about you becoming a homeowner. I do this every day because I want individuals who are from neighborhoods that they were born and raised to actually be able to stay there. Because in a minute, you're not going to be able to rent where you want, because your landlord is going to have a screening process and they're going to choose which candidate they want to rent. So the only way you can guarantee a property in your specific neighborhood is to actually own that property, and you have the say then.
You're right, because there are so many things happening. I mean, look what's happening in Bronzeville, Hyde Park, South Loop. There's so many properties and so much changeover and so many new developments that are coming that it is adjusting the demographic of the communities.
I have over 8,000 students in one of my groups that I teach, and they all live out of country, out of state, and they're all buying Inglewood, West Side. These are all investors. They don't live here, and they are buying up our property like crazy because they don't have 4 units and 2 units in certain states. I'm not going to say exact, but I think Washington, D.C. So a lot of the students, they have to come here in order to be able to build that generational wealth. So they are buying our properties up and they're putting tenants in them. So once again, you can be a house hacker and you can buy in the neighborhood that you were born and raised now, because sooner or later, you may not just have that same opportunity because everybody wants our properties.
100%.
Yeah. And it's amazing. Sometimes people knock the city, but they don't know the city. They don't know what's coming, the city and the suburbs, and what happens, what's good for the city, affects the suburbs as well. So I agree with you. Why not know where you're going to live? Why, say your landlord decides to raise the rent. We had a lot of that going on, just in the past and most recent years. Rent it's been getting so high.
And it's going to keep going. I mean, so I should adjust my niche is data. Data is my niche. That's like my thing. But I think it's on average, expectations are that new rents are going to increase 13% in the next year, right?
So
renewals, like the dollar rent paid, is estimated to increase 18% in the next 12 months. Now, if you're a renter and you're like, but rates are high, and that's true, right? Rates have pushed up monthly housing. They always do, right? Anytime there's an increase in rate, your monthly housing expense from a mortgage standpoint is going to go up relative. But one of the things I've been coaching my clients about is, okay, sure, your estimated mortgage might be $100 higher or $200 higher than what you're paying in rent now. But you got to make a long play, because your rent's not going to be what it is today when you renew your lease in 6 months. It's just not.
No, it's
so
not.
You got to think about locking in that long-term monthly payment. And the only way you can do that is if you own the property.
And your landlord might just decide that he wants to sell and cash it on his equity. And now you have to move, even if you're in that school district or whatever. Renting is just not an option, guys. It's just not an option.
Yeah.
No, it's really not. It's something that I think is, I don't even want to say short term. I mean, there's some situations, or maybe you're currently renting and you're looking for that right opportunity. Well, now's the right opportunity. Like, you're looking for that sign. Here's your sign. Here we all are. We're here to deliver. We're here to serve. And to put you into homeownership. So let's talk IDA, because I don't know how many people know about IDA. So who wants to take on IDA?
You want to take it, Nina? I could take it. You could take it. We could take it.
All of us can. I mean, so all of us are very well versed on IDA. I'll just start with some of the programs available. Currently range from $6,000 to $10,000. Some are forgivable. Some you would have to put into repayment. Okay, or repay at the end of the term. 640 credit score, single families, condos, townhomes, and 2 units. And then I'll let the rest of the team go into income and credit score.
Gotcha. Well, the credit score was the 640, and I just want to let you guys know I use the IDA program mostly for my multi-units, because if you do a regular conventional program and you don't qualify for the home possible and home ready, and we don't want to throw a lot of terms out there, but we do have certain programs conventionally that will allow you to put 5% down on a 2-unit. Most of the time you have to put 20 to 25% down. With the IDA program, you can put 5% down on a 2-unit property. So that is, a secret niche for utilizing the IDA, and it's what I utilize it for the most. I always tell my clients, when you get down payment assistance, normally your down payment assistance is going to have fees associated with, and normally have a slightly higher interest rate. Well, recently in this market, IDA's rate has been a little lower. So because of that, we've been utilizing the program a little more, because clients can save a little bit on the interest rate. So every day, it can change. But that's what I kind of utilize the IDA for me. It's a great program, but like I said, you always want to compare the interest rates of the IDA versus the non down payment assistance, and you want to compare fees and make sure that that program is going to work for you. And that's something we do when you do application with us. We do a scenario with you so you can see both programs to make sure, it's the best for you. But IDA is awesome and amazing. I think I did my first IDA loan about 15 years ago. So it is a program that keeps coming, at least 10 years ago, but it's a program that keeps coming and going and coming back, and it's been consistent, and they have some really great things going on. And the income limits for IDA are much higher than your average income limit for a regular down payment assistance program. So that's also amazing too. And the last thing is, you do not have to be a first-time home buyer to have a IDA loan. You just can't own more than one additional property in addition to the property you're going to purchase with the IDA loan. So that's my nuggets on IDA.
So, I mean, at the end of the day, the way that we want to look at this is whatever terminology, and I agree, we throw out too much terminology, it'll confuse everybody. Because we do this every day. It seems like nothing to us, but our listeners don't.
They're like, what is that?
Yeah, what are you talking about? What was the name of the lady that they, anyway, the bottom line is we have the resources, we have the abilities, we have the tools, we have the connections, we have the knowledge, we have the education to empower our people to live better, strive for more, and build their own wealth. Strive to be what you want to be, what you can be, and we can help you get there. We can help you get to that point. So we're going to wrap this up. But before we do, I want to make sure that everybody, each one of you gives your contact information. And we're going to have to talk about coming back and doing this again, because there's so much. I feel like we can dive in and get even further. We can continue to peel back the onion, the layers to the onion, keep going. So Elise, how do we get a hold of you? I don't know who you are. I don't have you on speed dial like I do, but how do I get a hold of you, and how do I find you on social media?
Certainly. I was going to make a joke, but then I figured like people
right ahead.
might not get it. So I'm not gonna, but no, you can find me, on all my social media, and everything is my name. So Elise, Elise, the traditional correct spelling, Elizalde. My last name's a doozy, Elizalde. So Elise.Elizalde on Instagram. That's where I'm at on Facebook, all of the social medias. My email, first dot last name, elise.elizalde@grarate.com. And I've got to hit you with the cell, the area code of champions, 574-276-3533. Got to hit that Indiana area code for all my Indiana clients. That's where I grew up. And I love you. I love you.
All right, Nina, give me all your info. We'll save Natasha for last.
All right, Nina Gonzales, Loans by Nina, bilingual. So muy excelente en hablar, leer, escribir, dictar el español. Todos estos programas están disponibles para ti. All right, so you can reach me and you can find me, Loans by Nina, on every social media platform. I'm not very creative. 312-532-8009. And my email address, nina.gonzales@grarate.com. The greatest rate you will ever find. So hit me up.
That's awesome. All right, Natasha, come in off of that one.
Right. So I'm Natasha Robinson. I am Loans by Natasha on Instagram, Natasha Robinson on Facebook. My email is Natasha, Natasha, @grarate.com. And my phone number is 773-459-6811. And if you don't remember any of that, if you just Google Natasha Robinson, Nina Gonzales, or Elise Elizalde, we will pop up and our link will pop up right there as well. So we have a great marketing team over at Guaranteed Rate.
I love that. I've got the same thing. If you Google Jennifer Williams or put Jennifer Williams Chicago, I'm on page 1. So
yes, great job.
That's the best way. And when you're looking to find out, oh, hey, I want to check these people out. I want to check these ladies out. What's going on over here? Well, that's what's up.
Jennifer, and how can everyone find you?
Everybody can find me at Jennifer Williams Broker on Instagram, social media, everywhere. Our podcast, LUXE Life, which this episode will be going on YouTube. It will also be on Spotify, iHeartRadio, TuneIn, Alexa, you name it. It's going to be on it. And we are going to make sure that all of our guests get the link so they can also share it on their social media to their clients, email, e-blast, whatever they want to do. We want to spread the knowledge and the wealth. We want to share our knowledge and our expertise to help our listeners and to help others. So as we conclude, stick around, ladies. We want to have a further chat. This is Jennifer Williams, podcast host of LUXE Life, proud realtor with Coldwell Banker Gold Coast. Tune in. Till next time. Thanks.
See you guys later.